However, GAAP includes a requirement that any business using the direct method for its cash flow statement must provide additional notes that include reconciliation. Where did we get our cash? Well, the bulk of it came from our customers. We got some interest and we received some dividends. So our cash inflow from operating activities was $290,000. Now, how did we spend our cash in operating activities? Well, mainly to our suppliers and employees. We paid some interest and some income tax. Altogether, that was a $220,000 of cash outflow, a negative amount. So when we take the 290 positive from receiving cash, subtract 220,000 paying cash, we get positive $70,000. It starts with net income, and this is important. The indirect method starts with net income because that number, the net income, should be pretty close because it requires fewer computations, as we'll see when we do our many homework problems that require us to complete a statement of cash flows. So let's look at it. You've already seen this before, this layout. Notice we're looking at our operating activity section up here. And how is it adjusted, or how is it laid out? We start with net income, and then we adjust it either up or down by these. And then we're going to have increases and decreases in our current assets and increases and decreases in our current liabilities. Now later on we'll explain why we have to add or subtract when these current assets increase or decrease. Just to give you an example, let's analyze a decrease in inventory. If inventory decreased, what happened? Well, we must have sold inventory. And if inventory was sold, what happens to cash? Cash increases. That's why we add the decrease in inventory in this section. And then notice here, we've got net cash provided by operating activities, $70,000. It's still the same number from the previous couple slides that showed also positive $70,000 from net cash flow from operating activities.